Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up, and this wrap-up is for Thursday, the 5th of August, 2021, about 5:40 p.m. Central Time. Now, I like to practice what I teach in my charting course, my enhanced Bollinger Band course, and what I do. One of the caveats that I have in trading, and I've learned it over so many years, and inevitably you break it, you break the rule, and you pay the price, is I don't want to go through what's called major reports. Now, this is not the stock market. You're not getting out of your Apple shares of that. You're getting out of a futures contract. Futures contracts are volatile. They'll let you back in, may not be the same price, may be a better price. Who the heck knows? But what you can't typically control that I've learned is the instant volatility if a report that's deemed major by the industry comes out and it has a shock factor to it. The market just evaporates on you and it's gone. I told traders that I have had long on my written updates and my morning videos, and they have been long stock indices nicely. And today was the day I just said to them, we got a nice rally. I don't want to worry about it. We'll catch the next train. That's all I can tell you. So my subscribers are going into these reports flat. The guess on the jobs data report, and that's the monster in the room, is between 840 to 870,000 jobs, with the unemployment rate falling to 5.7%. Now, there's wings to that. Some people think as low as 350,000 jobs. Some think 1 million too. We saw that the Fed seems to be thinking, many of the members, that we're going to see improvement in the jobs market. I don't know. I'm not seeing it in ADP numbers. I'm seeing the jobless claims not collapsing. They're starting to fall. Admittedly, they're finally starting to fall back. But are we getting those jobs filled? And that's going to be the big question. I do think that after the government program of giving money in those 25 states that kept the package going, that we will see an improvement in it. But a lot of the people that aren't in the workforce just might not come back the way you think. They might work from home. They might not want to ever go back to an office. You're already seeing a number of large companies, due to this new variant of COVID, this Delta variant, pushing back when their people can come to the office. I don't know the right thing. Do you get them into the office? Not. If they're vaccinated, I would guess they're okay. In France, as of August 30th, if you're in anything to do with customers and you're not vaccinated, you can be fired. So if you have an employer and he wants to fire you because you've decided you don't want to have a vaccine, that's your right to not be vaccinated, you have no recourse if he fires you. And remember, in many parts of Europe, just firing an employee is very difficult. They're really protected. That's what they've decided to do. And I'm not saying that's what's going to be the case in the United States, but those not vaccinated, I will predict this, they're going to feel ostracized. And that's what's going on. They're going to play every day that the people not vaccinated are 90% in the hospital. The sick people are those that are that way. We don't want you to go into a store without a mask. Right now in Chicago, that's the case. But they can take it to the next thing. If you're not vaccinated, we don't want you in. There's many things that can happen here. In any case, you're at a new high. You're up 28 handles. You're up a 3/4 of a percentage point almost, going into the all-important report tomorrow. The market is still caught in this area. You're now checking out the top part. 4 days ago, you were checking out the bottom part. So that swinging back and forth is fully at work. What's the trend? There is none on terms of trend. You have a lower low and a higher high. Moving averages, the market has held and keeps holding the 18-day average, and each time it's gotten under it, and when it's done it, I've been very quick to say here, will stay under that a short period of time. Eventually, I'll be wrong. But until it changes, it ain't broken. It's not changing. Now, on the upside, the Bollinger Band's 44.62, a new all-time high, and you have an embedded reading. So why am I coming out? Because that's a rule. So if the traders that get my recommendations followed it, that's it. I can't help you if the number comes out at some number that creates a dramatic rise or a break. I'm not smart enough to know how to do it. The algorithms will be ahead of you no matter what you do on that. In the NASDAQ, it's the same. Going into this report, embedded reading in the S&P, looking bullish. The resistance near the 15,281 level. The Dow Jones has got the embedded reading. The trend is down, the bias is up, but this rules the day. And today, they finally said, hey, I am the Russell 2000, and I am going to go into an uptrend too. You've left me behind long enough. Is that part of the rotation? Is it new buying coming into it? Well, it's overbought as can be. The resistance starts at the 100-day average in green at 2244.60. You got to 2232 today. You'd have to take out yesterday's low in the market right here at 2187.30 to break the trend, and I'd look for the resistance between 2244 and 2257.70. That's where I'm going to look for that. So those are the numbers as I see them. As I said yesterday, something bothered me, and I mentioned it to you here. I said, why were you down in the VIX if the stock market was down that much? Nobody wants the insurance. Maybe they don't think the market was going to stay down in stock indices. You broke again today. My analysis was correct on that. Tomorrow, it's all bets off. I have no idea the reaction. I let that first half hour, sometimes even longer, go by before I'll sit back and even think of putting out an update for my clients, do this, do that. I want the market to simmer down, and I want to understand what's happened, because now you have a new set of fundamentals. If the jobs data looks good, maybe that is the beginning of things. You got to plan that. If the market is no good on the jobs data, number that's 600,000, no. What if it's 500,000? No, that's bad. What does that mean for the markets? You got to put this all together to figure that out. You then get to the 30-year bonds, and as you can see, they've backed off. So now that market has got a pattern where you've got the momentum down, the trend is still up, but if you take out 165.12 and the low is 165.17 so far tonight, you break the pattern. Then you'd have a higher high, lower low. In addition, you have an outside day to the upside here, which says that if that's taken out tomorrow, I think it's a lock-in, the way that I teach charting, that the market's going to try to make a run lower, maybe to that 18-day average. I'm wrong if it got over that day's high. Okay? That's how I view the charts, at least. In the 10-year note, you have momentum down, trend up, you hit the upper Bollinger Band, and I know that for those of you that haven't bought the enhanced Bollinger Band course, you don't get it. That's where I think the pros came out. And that's where I would have told and did tell my clients, I think everybody's coming out there. And you'll say, well, everybody? That's what I think. You know, obviously that's not the case because open interest didn't go to zero, but that's what I think the pros do. Then you got your reversal, and all of a sudden this is what you have. I feel good with that call. Tomorrow changes everything. The slate is clear. Now I have a new fresh look, and I'll take a look to see what went on. Dollar index reversed the break that it had from the upper band to the lower band, and it's neutral going into tomorrow's report. If that's neutral, what's the euro? The opposite. Lower highs, lower lows, but over the 18-day average, neutral. No longer overbought. These markets are getting themselves to the point where they can play. And that's what I think pros do. They step aside, they analyze. If they're algorithms, they might just stay in the market. But human beings generally like to get a feel for what's going on. For the British pound, the battleground is so clear. You got up on the first run to the 100-day average in the upper Bollinger Band, then you fell back into the support, and you're still basically there. As that's occurring, the swing line, the slow stochastics, and let's take them here. Day one of being over 80. Day two, no. Day one. So you have an overbought market. We had the Bank of England today set their monetary policy. Many people thought they might make a move and tell you they're tapering their bond buying program or do something on interest rates. I didn't. I think it's too soon with COVID as rampant as it is there, and they did absolutely nothing. Then we come up to Bitcoin. So Bitcoin, as you can see, The market's got tonight both numbers over 80, but you got to throw that off because we don't know where today's going to close. So one day with both numbers over 80 and the day before should not have been. You're just overbought in a market that's void of trend now. You have a higher high, lower low. I don't see anything to do with that. We then get to the Brent Crude Oil, and this is the October versus the October. And as you can see, the market's hanging here at the 250 level, which gives the bid to the Brent over WTI. As you take a look right through here, you can see that you've also got a higher high, lower low. You're not trending. You stepped back in the market. You're sitting here with momentum basically still pointing lower but void of a trend. Bias is down. Same thing in the WTI. Gasoline, same thing. You've got a lower low, higher high, overbought condition, and you put it together and the markets are telling you, hey, let's see what goes tomorrow. Now, for my subscribers in the morning, this is what they're going to get from me first thing. At 5:40, I'll see what the world is doing, how the market's reacted overnight to what's going on. I will not tell them to buy or sell anything in tomorrow's tape that has to do in the financial arena, that being the metal markets, the currencies, the stock indices, or interest rates. I'll focus instead away from that to the soft commodities, possibly the grain market, although there's a huge big report coming out very shortly, the supply-demand report. We're going to get much better numbers on how big or small this crop is going to be, so you want to pay attention. But I cover all that each morning, and I am aggressive. I will tell you, buy here, sell there. This is what I want you to do. Here is your stop. I cover everything like this. There's 40 charts there. There's 40 in the spiders and ETFs, and I'll do those reports typically just before 9 o'clock or right after. Why? I want to get as much of the economic data. And the reports often come out, as you know, they start at 7:30 in the morning, and the big ones typically are all done by 9 o'clock in the morning. So I wait and see if any of those are coming out, and I'll wait to the very end. Now I can record for you what I think in the data is in the market. Got it? That's how we do it. On the bottom, on our website of these videos, there's a scroll bar, and when you pull it, it'll say stock indices. Pull it further, it'll flag up where the currencies are, the energy markets. And you know I'm covering Amazon, Apple, so many different markets in there for the traders, and I rotate them. You know, what I'm going to be doing this fall is asking my traders, give me some new markets you want me to cover, and I'm going to drop some markets. 40 charts is enough to cover. That's it, but I can rotate them each month, and we can have some fun with that. So if you'd like to learn more about this, it's so simple and inexpensive to get both packages. And let's face it, if you're an ETF trader, whether you like it or not, if you're trading SPY, IWM, QQQ, you're trading a futures contract that they're all based on that, and that's what they're going to base themselves on all the way through. $16.90. You're going to get the equivalent of 12 videos a week. There's going to be 5 weekly, Monday through Friday, that cover daily primarily, but every now and then I'll throw in the weekly chart. And then on Saturday, I do the weekly charts and throw in occasionally the daily, because I've got traders that want it to go long term. How do you get this? It's simple. Just go to our website. Under the word education, it's there. You can call my staff. I promise you, tomorrow's videos are going to be really important. Can't wait. I'm Ira Epstein. You have a good day.